Let's begin with a review of the Truth in Lending Act, TILA, and Regulation Z. What is the primary purpose of the Truth in Lending Act as implemented by Regulation Z? Is it A, to regulate interest rates charged by lenders? B, to enforce fair housing laws? C, to ensure consumers receive clear disclosures about credit terms? Or D, to oversee the licensing of mortgage originators? The correct answer is C, to ensure consumers receive clear disclosures about credit terms. The Truth in Lending Act, through Regulation Z, is designed to promote informed use of consumer credit by requiring clear disclosure of key terms and costs, allowing consumers to compare credit terms more effectively. A consumer applies for a personal loan at a local bank, and the loan officer provides a document outlining the annual percentage rate and total finance charges before the loan is finalized. What requirement of TILA does this action fulfill? Is it A, it fulfills the requirement to verify the consumer's income? B, it fulfills the requirement to disclose key credit terms before consummation? It fulfills the requirement to report the loan to credit bureaus? Or D, it fulfills the requirement to provide a privacy notice? The correct answer is B, it fulfills the requirement to disclose key credit terms before consummation. TILA requires lenders to provide clear disclosures of the annual percentage rate and total finance charges before a loan is finalized, ensuring consumers can make informed credit decisions. Which of the following is always included in the calculation of the annual percentage rate under the Truth in Lending Act and Regulation Z? Is it A, application fee? B, late payment penalty? C, interest charged on the loan? Or D, title insurance premium? The correct answer is C, interest charged on the loan. The annual percentage rate must include all finance charges, such as interest, that the consumer is required to pay as a condition of the credit. This ensures the APR reflects the true cost of borrowing. A lender charges Maria a loan origination fee and a credit report fee for her mortgage. Which of these fees must be included in the finance charge disclosure under Regulation Z? Is it A, only the loan origination fee? B, only the credit report fee? C, both fees must be included? Or D, neither fee must be included? The correct answer is A, only the loan origination fee. Loan origination fees are considered finance charges and must be disclosed, while credit report fees are typically excluded unless required by the lender as a condition of credit. Which document must be provided to a borrower within 3 business days of receiving a loan application under the Truth in Lending Act? Is it A, closing disclosure? B, loan estimate? C, promissory note? Or D, servicing transfer statement? The correct answer is B, loan estimate. The loan estimate must be provided to the borrower within 3 business days of receiving a loan application, as required by TILA and Regulation Z. This disclosure helps borrowers understand the key terms and costs of the mortgage.
How'd you do on the first 5 questions? Go ahead and subscribe to Birdsy now and turn your progress into exam day confidence. Ready to jump back in? Let's go.
Which of the following is not required to be disclosed in the initial TILA disclosure provided to a borrower? Is it A, annual percentage rate? B, total finance charge? Borrower's credit score? Or D, total of payments? The correct answer is C, borrower's credit score. Why this can be tricky? The initial TILA disclosure must include the annual percentage rate, finance charge, and total payments, but it does not require disclosure of the borrower's credit score, which is often confused with required disclosures. Which document is required by Regulation Z to disclose the total finance charge and annual percentage rate to a borrower in a closed-end mortgage transaction? Is it A, loan estimate, B, closing disclosure, C, promissory note, or D, servicing disclosure statement? The correct answer is B, closing disclosure. The closing disclosure, required by Regulation Z, provides borrowers with the total finance charge and annual percentage rate for closed-end mortgage loans. This ensures transparency and helps borrowers compare loan offers accurately before finalizing their decision. Which of the following is not required to be included in the loan estimate under TRID rules? Is it A, estimated closing costs, B, projected payments, C, promissory note, or D, loan terms? The correct answer is C, promissory note. Why this can be tricky? The loan estimate must include most costs and terms, but the promissory note is not a required disclosure within the loan estimate. The other items are all required to be disclosed under TRID rules. Which of the following is a requirement under the Ability-To-Repay rule established by Regulation Z? Is it A, the lender must only verify the borrower's credit score, B, the lender must consider the borrower's income, assets, employment, and debt obligations, C, the lender can rely solely on the borrower's stated income without verification, or D, the lender is not required to assess the borrower's ability to repay for any mortgage loan? The correct answer is B, the lender must consider the borrower's income, assets, employment, and debt obligations. Lenders must make a reasonable and good faith determination of a consumer's ability to repay a mortgage loan before extending credit, as required by Regulation Z under the Truth in Lending Act. A loan officer at a bank is reviewing an application for a qualified mortgage and notices the borrower's debt-to-income ratio is slightly above the standard threshold. What must the loan officer do to comply with Regulation Z? Is it A, approve the loan as a qualified mortgage regardless of the ratio, B, ignore the debt-to-income ratio if the borrower has a high credit score, C, decline to classify the loan as a qualified mortgage unless the ratio meets the standard, or D, approve the loan as a qualified mortgage if the borrower provides a larger down payment? The correct answer is C, decline to classify the loan as a qualified mortgage unless the ratio meets the standard. To meet qualified mortgage standards under Regulation Z, the loan officer must ensure the loan meets all required criteria, including the debt-to-income ratio limit, or the loan cannot be considered a qualified mortgage.
If you want more than just rapid-fire questions, head over to Birdsy.ai. You can take unlimited practice exams and get instant help from your personal AI study partner. It's like having a tutor 24/7. Try it free. You'll find a link in the description.
Which of the following is a primary purpose of the Truth in Lending Act as it relates to high-cost mortgages under HOEPA? Is it A, to set maximum interest rates for all mortgages, B, to require clear disclosure of loan terms and costs to consumers, C, to regulate real estate agent licensing requirements, or D, to determine property appraisal values for lenders? The correct answer is B, to require clear disclosure of loan terms and costs to consumers. The Truth in Lending Act aims to promote the informed use of consumer credit by requiring disclosures about loan terms and costs, especially for high-cost mortgages under HOEPA, to protect consumers from abusive lending practices. A lender offers Maria a mortgage with points and fees that exceed the HOEPA threshold, and the loan includes a prepayment penalty. What must the lender do before closing the loan? Is it A, waive all fees before closing, B, remove the prepayment penalty from the loan. C. Provide special written disclosures about the high-cost nature of the loan. Or D. Obtain an additional property appraisal before closing. The correct answer is C. Provide special written disclosures about the high-cost nature of the loan. When a loan meets HOEPA high-cost thresholds, the lender must provide special written disclosures at least 3 business days before closing, informing the borrower of the risks and features of the high-cost mortgage. Real Estate Settlement Procedures Act, RESPA, and Regulation X. Which type of transaction is covered by the Real Estate Settlement Procedures Act for the purposes of requiring disclosures to consumers? Is it A. Commercial property purchases, B. Vacant land sales with no dwelling intended, C. Federally related mortgage loans for residential property, or D. Cash sales of residential homes? The correct answer is C. Federally related mortgage loans for residential property. RESPA applies to federally related mortgage loans, which include most loans secured by a lien on residential real property. This ensures consumers receive disclosures about settlement costs and procedures. A borrower applies for a mortgage loan to purchase a single-family home, and the lender is federally insured. According to RESPA, what must the lender provide to the borrower early in the process? Is it A. A final closing disclosure at application, B. A loan estimate form, a list of all real estate agents involved, or D. A copy of the property deed? The correct answer is B. A loan estimate form. RESPA requires lenders to provide a loan estimate form early in the process for federally related mortgage loans, ensuring borrowers understand settlement costs and loan terms. Which of the following is prohibited under Section 8 of the Real Estate Settlement Procedures Act regarding referral fees? Is it A. Paying a real estate agent for referring a client to a mortgage lender, B. Charging a reasonable fee for actual settlement services performed, C. Providing a list of recommended service providers without compensation, or D. Disclosing affiliated business arrangements to clients? The correct answer is A. Paying a real estate agent for referring a client to a mortgage lender. Section 8 of RESPA prohibits giving or accepting any fee, kickback, or thing of value for the referral of settlement service business involving a federally related mortgage loan. Which statement about RESPA, Section 8, is not accurate? Is it A. Section 8 prohibits kickbacks for referrals of settlement services, B. Section 8 applies to federally related mortgage loans, C. Section 8 allows referral fees if all parties are notified in writing, or D. Section 8 violations can result in criminal penalties? The correct answer is C. Section 8 allows referral fees if all parties are notified in writing. Why this can be tricky? The question asks for the inaccurate statement. RESPA Section 8 does not allow any payment for referrals, even if disclosed, which is a common misconception. A title company offers a real estate agent free advertising space in exchange for each client referred to them for closing services. Is this arrangement allowed under RESPA Section 8? Is it A. Yes, because the advertising is not a direct payment, B. No, because providing free advertising for referrals is considered a thing of value under Section 8, C. Yes, if the agent discloses the arrangement to clients, or D. No, but only if the advertising exceeds a certain dollar amount. The correct answer is B. No, because providing free advertising for referrals is considered a thing of value under Section 8. Offering anything of value, such as free advertising, in exchange for referrals is a prohibited kickback under RESPA Section 8, regardless of whether the value is monetary or non-monetary. What must a lender provide to a borrower when referring them to an affiliated settlement service provider under the Real Estate Settlement Procedures Act? Is it A. A copy of the loan estimate form, B. An affiliated business arrangement disclosure. C. A list of all local settlement service providers. Or D. A copy of the closing disclosure. The correct answer is B. An affiliated business arrangement disclosure. RESPA requires that a lender provide an affiliated business arrangement disclosure to the borrower at or before the time of referral, informing them of the relationship and estimated charges. A real estate broker refers a buyer to a title company in which the broker has a financial interest and provides a written disclosure at the time of referral. According to RESPA, what else must the broker ensure? Is it A. The broker must also provide a copy of the sales contract? B. The broker must verbally explain the disclosure to the buyer? C. The broker must not require the buyer to use the affiliated title company? Or D. The broker must notify the State Real Estate Commission? The correct answer is C. The broker must not require the buyer to use the affiliated title company. RESPA requires that the broker not require the buyer to use the affiliated title company and must disclose the relationship and estimated charges in writing at the time of referral. Under RESPA and Regulation X, what is the maximum cushion a lender may require in an escrow account to cover property taxes and insurance payments? Is it A. 1 month, B. 3 months, C. 2 months, or D. 6 months? The correct answer is C. 2 months. RESPA and Regulation X limit the escrow account cushion to no more than 2 months of escrow payments for taxes and insurance, in addition to the amount needed to pay the actual bills when due. A borrower receives an annual escrow account statement from their loan servicer showing a surplus in the account. According to RESPA and Regulation X, what must the servicer do if the surplus exceeds $50? Is it A. Apply the surplus to the next year's escrow payments? B. Refund the surplus to the borrower? C. Keep the surplus as a cushion for future increases? Or D. Transfer the surplus to the lender's operating account? The correct answer is B. Refund the surplus to the borrower. If the surplus in the escrow account exceeds $50, RESPA and Regulation X require the servicer to refund the excess amount to the borrower within 30 days unless the borrower is delinquent. After receiving notice that her mortgage servicing will be transferred to a new company, Maria wants to know how long her payments will be protected from late fees if she accidentally sends a payment to the old servicer during the transfer period. Is it A. 15 days, B. 30 days, C. 60 days, or D. 90 days? The correct answer is C. 60 days. During a servicing transfer, RESPA requires a 60-day grace period where payments sent to the old servicer cannot be subject to late fees or reported as late, protecting borrowers during the transition. Fair lending and consumer protection laws. Which of the following is a protected characteristic under the Equal Credit Opportunity Act as defined by Regulation B? B. Credit score. C. Employment status.
Or D. Type of collateral?
The correct answer is A. Religion. The Equal Credit Opportunity Act and Regulation B prohibit discrimination in credit transactions based on specific protected characteristics, including race, color, religion, national origin, sex, marital status, and age. Which of the following is not considered an applicant under Regulation B for the purposes of ECOA protections? Is it A. A business seeking a loan, B. A married couple applying for a joint credit card, C. A creditor evaluating a loan application, or D. An individual requesting an increase in their credit limit? The correct answer is C. A creditor evaluating a loan application. Why this can be tricky. Regulation B defines an applicant as any person who requests credit, including individuals and businesses, but a creditor is not an applicant. This distinction is sometimes overlooked on exams. Maria, a single mother, applies for a car loan and is asked about her marital status and plans for having children. Under Regulation B, is this line of questioning permissible? Is it A, yes, if the lender asks all applicants the same questions? B, no, because Regulation B prohibits inquiries about future childbearing and unnecessary marital status information. C, yes, if Maria volunteers the information first. Or D, no, unless Maria is applying for a joint account. The correct answer is B, no, because Regulation B prohibits inquiries about future childbearing and unnecessary marital status information. Regulation B prohibits creditors from asking about future childbearing or requiring information about marital status, except as necessary for certain types of credit, making this line of questioning impermissible.
Have you noticed the code in the bottom corner? The next time you're stumped, take that code to Birdsy.ai. You'll get immediate help, complimentary study sessions, and access to hundreds of additional questions. It's the best tool to help you pass with confidence.
Fair Housing Act prohibited discrimination terms. Which of the following characteristics is explicitly protected from discrimination under the Fair Housing Act? Is it A, religion, B, credit score, or D, marital status? The correct answer is A, religion. The Fair Housing Act prohibits discrimination based on race, color, national origin, religion, sex, familial status, and disability. These are the protected classes recognized by federal law in housing-related transactions. Which of the following is not prohibited by the Fair Housing Act when advertising a rental property? Is it A, stating no children allowed, B, advertising Christian tenants preferred, C, listing the property as no smoking, or D, describing the apartment as ideal for single professionals? The correct answer is C, listing the property as no smoking. Why this can be tricky. The Fair Housing Act prohibits advertising that indicates a preference or limitation based on protected characteristics. However, stating that a property is no smoking is not related to any protected class and is allowed. A landlord refuses to rent an apartment to Maria because she has 2 young children, claiming the building is adults only. Does this action violate the Fair Housing Act? Is it A, no, because landlords can set any occupancy rules they want? B, yes, because familial status is protected under the Fair Housing Act? C, no, unless Maria is also a member of another protected class? Or D, yes, but only if Maria files a complaint within 30 days. The correct answer is B. Yes, because familial status is protected under the Fair Housing Act. Refusing to rent to someone because they have children is discrimination based on familial status, which is prohibited under the Fair Housing Act, unless the property qualifies as housing for older persons. Fair Credit Reporting Act, FCRA, key provisions. Which of the following is a key requirement of the Fair Credit Reporting Act regarding consumer access to credit reports? Is it A, credit reports must be provided only to lenders upon request? B, credit reports can only be accessed by employers with no restrictions? C, consumers have the right to obtain a copy of their credit report from each major credit bureau? Or D, credit reports are only available to government agencies for investigations? The correct answer is C. Consumers have the right to obtain a copy of their credit report from each major credit bureau. The FCRA requires that consumers have the right to access their credit reports from consumer reporting agencies. This provision ensures transparency and allows consumers to check for errors or unauthorized activity. Maria applies for a car loan and is denied based on information in her credit report. Under the FCRA, what must the lender provide to Maria in this situation? Is it A, a copy of her full credit report, B, an adverse action notice with the name and contact information of the credit bureau used, C, a written explanation of her credit score calculation, or D, a list of all lenders who have accessed her credit report in the past year? The correct answer is B, an adverse action notice with the name and contact information of the credit bureau used. The FCRA requires that when credit is denied based on a credit report, the lender must provide an adverse action notice, including the source of the report and information on how to obtain a free copy. Home Mortgage Disclosure Act, HMDA, Purpose and Reporting Terms. What is the primary purpose of the Home Mortgage Disclosure Act in the context of fair lending laws? Is it A, to set interest rates for home loans, B, to provide grants for first-time homebuyers, C, to require lenders to report certain information about home loans, or D, to enforce foreclosure procedures? The correct answer is C, to require lenders to report certain information about home loans. The Home Mortgage Disclosure Act is designed to promote transparency in mortgage lending by requiring financial institutions to report specific loan data. This helps regulators and the public monitor lending patterns and identify possible discriminatory practices. Which of the following best describes a required reporting term under HMDA, even if the loan application is denied? Is it A, the borrower's employment history only if the loan is approved, B, the action taken on the loan application, the borrower's credit score only if the loan is funded, or D, the property's appraised value only for refinances? The correct answer is B, the action taken on the loan application. Why this can be tricky? HMDA requires reporting on all applications, including those denied, and the action taken on each application is a key reporting term. Some may incorrectly assume only approved loans are reported. Gramm-Leach-Bliley Act, GLBA, Privacy Requirements. Which of the following is a primary requirement of the Gramm-Leach-Bliley Act regarding the handling of consumers' non-public personal information? Is it A, allow unlimited sharing of information with affiliates, B, disclose only public information to third parties, C, provide consumers with a privacy notice explaining information sharing practices, or D, require consumers to opt in before any information is collected? The correct answer is C, provide consumers with a privacy notice explaining information sharing practices. The GLBA requires financial institutions to provide clear privacy notices to consumers explaining how their non-public personal information is collected, used, and shared, and to offer the opportunity to opt out of certain disclosures. A loan officer at a bank receives a request from a third-party marketing company for customer account details and considers sharing the information without notifying the customers. According to the Gramm-Leach-Bliley Act, what must the bank do before sharing this information? Is it A, share the information immediately if the third party is reputable, B, provide customers with a privacy notice and an opportunity to opt out before sharing, C, only share information if the customer has opted in, or D, refuse all requests from third parties for customer information? The correct answer is B, provide customers with a privacy notice and an opportunity to opt out before sharing. The GLBA requires that customers be given a privacy notice and an opportunity to opt out before their non-public personal information is shared with non-affiliated third parties. SAFE Act and Dodd-Frank Act provisions. Which federal law requires mortgage loan originators to be registered or licensed through the nationwide multi-state licensing system and registry? Is it A. SAFE Act, B. Dodd-Frank Act, C. Truth in Lending Act, or D. Real Estate Settlement Procedures Act? The correct answer is A. SAFE Act. The SAFE Act mandates that all mortgage loan originators must be either state licensed or federally registered through the nationwide multi-state licensing system and registry to ensure consumer protection and industry oversight. Which of the following individuals would not be required to obtain a SAFE Act license as a mortgage loan originator? Is it A. a mortgage broker working for a state-licensed company, B. a loan officer employed by a non-bank lender, C. a registered mortgage loan originator at a federally regulated depository institution, or D. a mortgage loan originator working as an independent contractor? The correct answer is C. a registered mortgage loan originator at a federally regulated depository institution. Why this is tricky? The SAFE Act exempts certain employees of federally regulated institutions from state licensing, requiring only registration. Many assume all originators need a license, but registration alone is sufficient for these individuals. Maria is hired by a national bank to originate residential mortgage loans and is told she must complete registration through the nationwide multi-state licensing system and registry before starting. What is the primary purpose of this registration requirement? Is it A. to allow Maria to work in multiple states without any further requirements, B. to provide a centralized system for tracking and monitoring mortgage loan originators' credentials and disciplinary actions, C. to exempt Maria from all state and federal mortgage regulations, or D. to replace the need for any background checks or fingerprinting? The correct answer is B. to provide a centralized system for tracking and monitoring mortgage loan originators' credentials and disciplinary actions. The registration ensures that Maria's background, qualifications, and employment history are tracked and accessible, promoting transparency and consumer protection in the mortgage industry as required by the SAFE Act. Nationwide Multi-State Licensing System NMLS requirements. Which entity is responsible for maintaining the nationwide multi-state licensing system and registry for mortgage loan originators? Is it A. the Federal Reserve, B. the Consumer Financial Protection Bureau, C. the Conference of State Bank Supervisors and the American Association of Residential Mortgage Regulators, or D. the Department of Housing and Urban Development? The correct answer is C. the Conference of State Bank Supervisors and the American Association of Residential Mortgage Regulators. The Conference of State Bank Supervisors and the American Association of Residential Mortgage Regulators jointly maintain the NMLS, which is the official system for licensing and registration of mortgage loan originators under the SAFE Act. Maria, a newly hired mortgage loan originator, is told by her employer that she can begin taking residential loan applications before her NMLS registration is complete. According to SAFE Act requirements, is this allowed? Is it A. yes, as long as she is supervised by a licensed originator, B. no, she must be registered with the NMLS before taking applications, C. yes, if she completes registration within 30 days, or D. yes, if her employer is registered with the NMLS? The correct answer is B. no, she must be registered with the NMLS before taking applications. Under the SAFE Act, an individual must be registered with the NMLS before engaging in activities as a mortgage loan originator, including taking loan applications.
Did you get a different answer? Or maybe you have a question about the exam in general? Drop it in the comments below. We read and answer them personally.
Loan originator compensation rules. Which of the following forms of compensation is prohibited for a loan originator under the Dodd-Frank Act's Loan Originator Compensation Rules? Is it A, compensation based on the loan's interest rate? B, compensation based on the number of loans closed? C, compensation based on the loan originator's hourly wage? Or D, compensation based on the volume of applications taken? The correct answer is A, compensation based on the loan's interest rate. The Dodd-Frank Act prohibits compensation to loan originators that is based on the terms or conditions of the loan, such as interest rate or loan amount, to prevent steering consumers toward more expensive loans. Under the SAFE Act and Dodd-Frank Act, can a loan originator receive compensation from both the consumer and the lender for the same transaction? Is it A, yes, if both parties agree in writing? B, no, compensation must come from only one party per transaction? Or D, yes, but only if the lender is a federally regulated institution? The correct answer is B, no, compensation must come from only one party per transaction. Why this is tricky? The rules strictly prohibit dual compensation to prevent conflicts of interest, but some may think exceptions exist. Loan originators may only receive compensation from one source per transaction, not both. A mortgage company offers a bonus to loan originators for closing loans with prepayment penalties. Is this allowed under the Dodd-Frank Act's compensation rules? Is it A, yes, as long as the borrower is informed of the penalty? B, yes, if the bonus is a fixed amount for each loan closed? C, no, compensation cannot be based on loan terms like prepayment penalties? Or D, no, unless the bonus is paid by the consumer instead of the lender? The correct answer is C. No, compensation cannot be based on loan terms like prepayment penalties. Compensation based on specific loan features, such as prepayment penalties, is prohibited under the Dodd-Frank Act to protect consumers from being steered into unfavorable loans. Dodd-Frank Act Consumer Protection Provisions. Which federal law established the Consumer Financial Protection Bureau to oversee and enforce consumer protection in the financial sector? Is it A, SAFE Act, B, Dodd-Frank Act, C, Truth in Lending Act, or D, Gramm-Leach-Bliley Act? The correct answer is B, Dodd-Frank Act. The Dodd-Frank Act created the Consumer Financial Protection Bureau to centralize and strengthen oversight of consumer financial products and services, ensuring fair treatment and transparency for consumers. Which of the following is not a primary goal of the Dodd-Frank Act's consumer protection provisions? Is it A, increasing transparency in financial products? B, preventing abusive lending practices? C, preventing unfair competition among lenders? Or D, ensuring fairness in consumer financial transactions? The correct answer is C, preventing unfair competition among lenders. Why this can be tricky? All options may seem related to consumer protection, but only the prevention of unfair competition is not a primary goal of the Dodd-Frank Act's consumer protection provisions. The Act focuses on transparency, fairness, and preventing abusive practices. Mortgage Assistance Relief Services, MAP rule definitions. Which of the following best describes a mortgage assistance relief service as defined under the MAP rule? Is it A, a service that provides home inspection reports only? B, a service that negotiates with lenders to modify mortgage terms? C, a service that offers moving and relocation assistance? Or D, a service that provides landscaping for foreclosed properties? The correct answer is B, a service that negotiates with lenders to modify mortgage terms. A mortgage assistance relief service is any service that claims to help consumers obtain mortgage loan modifications or avoid foreclosure, as defined by the MAP rule. This includes negotiating with lenders or servicers on the consumer's behalf. Under the MAP rule is a company that only advertises mortgage modification services but does not actually provide them, considered a mortgage assistance relief service provider. Is it A? No, because advertising alone is not covered. B? Yes, but only if they charge upfront fees. C? Yes, because advertising mortgage assistance relief services is included under the MAP rule. Or D? No, unless the company is a licensed attorney. The correct answer is C. Yes, because advertising mortgage assistance relief services is included under the MAP rule. Why this can be tricky? The MAP rule applies to entities that advertise, market, or provide mortgage assistance relief services. Even if a company only advertises such services, it is still subject to the MAP rule's requirements and definitions. Other federal mortgage-related laws. Under the Homeowners Protection Act, when is a borrower generally eligible to request cancellation of private mortgage insurance on a conventional loan? Is it A, when the loan is paid off? B, when the loan balance reaches 80% of the original property value? C, after 5 years of on-time payments? Or D, when the property value increases by 20%? The correct answer is B, when the loan balance reaches 80% of the original property value. A borrower can request cancellation of PMI when the principal balance of the loan reaches 80% of the original value of the property, provided payments are current and there are no other disqualifying factors. Maria purchased a home with a conventional loan and has made all payments on time. Now that her loan balance is at 78% of the original value, what must her lender do under the Homeowners Protection Act? Is it A, continue charging PMI until Maria requests cancellation? B, require Maria to refinance her loan to remove PMI? C, automatically terminate PMI if Maria is current on payments? Or D, wait until the loan is paid off to terminate PMI? The correct answer is C, automatically terminate PMI if Maria is current on payments. At 78% of the original value, the lender is required to automatically terminate PMI if the borrower is current on payments, regardless of whether the borrower requests it. Flood Disaster Protection Act requirements. Which federal law requires lenders to determine whether a property is located in a designated special flood hazard area before making, increasing, renewing, or extending a loan secured by improved real estate? Is it A, Truth in Lending Act? B, Flood Disaster Protection Act? Real Estate Settlement Procedures Act? Or D, Home Mortgage Disclosure Act? The correct answer is B, Flood Disaster Protection Act. The Flood Disaster Protection Act requires lenders to check if a property is in a special flood hazard area and ensure flood insurance is in place before completing the loan process. Which federal law limits the interest rate that can be charged to active duty service members on pre-service mortgage obligations? Is it A, Truth in Lending Act? B, Real Estate Settlement Procedures Act? C, Servicemembers Civil Relief Act? Or D, Homeowners Protection Act? The correct answer is C, Servicemembers Civil Relief Act. The Servicemembers Civil Relief Act, or SCRA, limits the interest rate on pre-service mortgage obligations for active duty service members to help protect them from financial hardship during service.
Thanks for watching. If you found this exam review helpful, be sure to subscribe for more real-world practice and topic-focused study videos. And visit Birdsy.ai to start your free trial of Birdsy, your AI-powered study partner.